Hello, this is Dale, and this is my nightly video blog for Thursday, the 18th of July. That should be the 18th of July. I'm going to talk about some new indicators tonight, and we just want to hold our positions. We've only got two. We've got two puts, GlaxoSmithKline and KO Coca-Cola, and one call in DFS, so we don't have any changes necessary tomorrow. I did want to review these new indicators with you tonight. Remember, this is not a recommendation to buy or sell, that Options Infinity LLC is not a brokerage firm. Our instruction is for educational purposes only. Now, those of you that have been with me for a while know that we kind of struggled through Baxter trades last year. I actually took 4 losses on Baxter, and we got out of Baxter back in May. I've been working for the last 2 months just trying to figure out what I can do to improve that trading. One of the things you're going to get here on this blog is constant tweaking of an already dynamite sound strategy, and what you're hearing tonight, I think, is really going to improve our performance. The two indicators I'm looking at: one, I've replaced the CCI, the Commodity Channel Index, with the slow stochastics. And what we're looking for here is when the blue crosses the red to the upside, that is bullish. When it crosses to the downside, that is bearish. The other indicator I'm looking at is, rather than looking at just the straight 35-day moving average, I'm looking at the 15-day simple moving average and the 5-day simple moving average. And the combination of these two, I think, shows without a doubt whether we should be in a trade or not. And it's the combination of those two. I'm keeping everything the same here on the long term, because I think that tells us exactly what position we want. And then the short term, the combination of these two, I think, along with the RSG, are going to tell us exactly whether, okay, everything's in alignment long term, but are we ready to fire off on short term? And that's going to be key. And the way this came out, of course, is after analyzing the losses we took on Baxter last year. I've come up with these two with the help of my son, who's really into all these indicators. We might trim this a little bit, but as we do, I'll let you know. Very easy to change these. You just go up into Studies, go under Edit Studies, and you can go into Simple Moving Average. Here's the 5 and the 15, and take off the 35, and then come under the Stochastic Slow. And this right now is default, and we're going to leave it like that for the time being, although I might trim that a little bit. Let's go back in time, and the first trade we did on Baxter was on October 23rd last year. And at that point in time, it was above the +1 on the regression channel. It was down below the -20 on the Williams, and the money flow was going out. So I thought, while the planets were in a line on the long term, and you can see that the RSG had been red for a while, we got into there. But and also you can see that the slow stochastics was showing bearish too. However, at this point, the 5-day was above the 15-day, and that is bullish. It never did cross over there as a continued bullish. This would have kept us out of that trade and averted the first loss. Second trade we had was on the 20th of December, the 20th of December being right here. And at that point in time, we got in with a put. You can see that both the 5 and the 15-day were bullish, and so was the stochastics. We should have stayed out of there. It never did cross, and by the time we finally got out, it had made a new high, and we had lost money. So once again, this combination would have saved us from getting into that put position. Then we come up to February 20th. February 20th was right here, and that looked like a good position. You can see that the 5 and 15-day moving average. Look, this thing's kind of cool because it kind of shows it firing off. This was firing off to the bottom, and we were looking bearish down here. This was a good position to get in. Had a good first day, and then things turned around real quick, and it started firing again to the upside, which it told us right here and the RSG, and that would have averted this large loss going into the opposite direction. So once again, we would have been saved on that one. And then the last one was on the 22nd of April. 22nd of April was right there. You can see that we were in alignment, but shortly thereafter it turned around and headed on up. So it could have, two of them it would have told us don't get in yet, and two of them shortly after going in it would have said get out. Okay, and that's what we want. That's what we want, and I think the combination of these two are going to really help us. They're going to help us in our theta trades. We can look at those for seeing whether we can put on a bull put or a bear call. And let's just take a look at that real quick on the RUT. You can see that on the RUT we got into our theta trade on the 9th of July, and you can see at that point in time this thing was firing up here, and we were firing here, so it just didn't make sense for us to put on a iron condor. At that point in time, what we wanted for sure would have been a bull put. So I think this combination is going to really benefit us as we go forward. And I'm really looking forward to that, and we will talk about that more. I hope everybody has a great weekend, and come on back Sunday. Bye-bye now.